The following presentation will evaluate the strategic and non-strategic decision making by Starbucks Coffee Organization. The presentation will offer an overview about the company as a whole and how it has developed over the years into the global brand that it is today. This will mainly focus on the financial decisions and how they go about making themselves a much better outfit and help expand their global brand. I chose to focus on the financial side of the annual report 2011 as it offered the best insight on how the organisation uses different strategies to help them expand. The very first Starbucks coffee shop was opened on March 30th, 1971 by three gentlemen with three different professions. It was originally opened as a single roaster and retailer of whole bean and ground coffee, tea and spices. The three gentlemen were Jerry Baldwin, an English teacher, Gordon Boker, a writer, and Zev Tsai, a history teacher. Current CEO Howard Schultz joined the organisation as Director of Retail Operations and Marketing in 1982 with the idea of selling beverages to restaurants and espresso bars. Today, Starbucks has over 17,600 stores globally, with the recent stores being opened in Morocco and Norway. SWOT analysis. The strengths that Starbucks have are that it currently lies inside the top 100 best companies to work for in Fortune magazine. It has a consistent high quality of service, and it has a high market share and market growth. Weaknesses. It has been previously criticised for not using free trade products. There was a recent report about the organisation avoidance of paying corporation tax in the UK in the past 15 years, and this could be viewed as a major weakness. However, reports have surfaced that this is about to change, and the company have found a new strategy to put them back on the map by paying the tax. Some opportunities are that they are a big company now that they could diverse their product not only in just coffee but other things. They have a strong financial support, and the potential employees are educated people, which makes it easier to be trained. Some threats are that its competitors such as McDonald's and copycat brands could pose a threat with their introduction of their own version of instant coffee. The increase of price in the products that they sell could end up being a major negative, as the recession or a downturn in the economy would affect consumer spending. Strategy. This can be defined in two ways: the pattern or plan that integrates an organization's major goals, policies, and action sequences into a cohesive whole, or strategy is the direction and the scope of an organization over the long term, ideally which matches its resources to its changing environment. However, most definitions of strategy emphasize that it involves the overall direction in which the business enterprise is developing, addressing general questions such as what does the business do, as well as more specific questions such as where is the business going. Of the two definitions, the second by Johnson and Scholes relates better to Starbucks, as they are an organisation that are always looking to expand. Starbucks' current strategies aim to maximise market penetration, provide a relaxing social atmosphere to its customers, encourage a great working environment for their employees, and also achieve profitability. Starbucks has always been a company that has every year managed to beat the previous year in the case of revenue. 2011 saw a record $11.7 billion turnover, with an 11% increase to previous year's total. Other areas that Starbucks highlighted as areas where revenue had increased included operating income, which stood at over $1.6 million, operating margin, which had increased by 14.8% from the previous year 2007, which previously stood at 13.7%. The improvements and increase in the performance of the organisation was cited as being down to their business model and the dedication of their employees. As an organisation, Starbucks have to always make a number of strategic decisions in their different areas of business, with the main focus of this particular report being finance. Research in the report shows that the company have followed the same strategic decisions and targets for the previous 2 years, as they have been met thoroughly, and they feel it's a global brand that if they set the same targets or same type of targets that have been previously successful, they can only get positive results. Some of the targets that have been met and being looked at as a benchmark for the following year include meeting the predictions of the capital expenditure that had been projected from the annual report, and also the opening of more than 400 stores internationally, with the majority expected to be licensed stores. Starbucks have also highlighted an expectation of increased capital expenditure in 2012 compared to 2011, reflecting additional investments in stores, renovations, and manufacturing capacity. Non-strategic decisions are decisions that involve generally the day-to-day operations of running the business. Being a company always looking for ways to improve and change, there are a number of strategic decisions made, but also some non-strategic decisions that are made to mostly benefit customers. The decision to introduce Via Coffee in financial context could be viewed as having a negative effect on the revenue, according to the financial report, showing that the non-strategic move of Via is a way to keep customers returning to the store. Therefore, the company is not losing customers, and is still gaining financially through the aims listed in the annual report that focus on the wider scale of introducing new stores globally. Therefore, expanding and increases the chances of gaining more shareholders and larger partnerships. Financial risk management is defined as the practice of creating economic value in a firm by using the financial instruments to manage exposure to risk, particularly credit risk and market risk. Being the global brand that they are, Starbucks are very high risk financially, as they are a worldwide store, but also with major rivals, having invested in instant coffee and have begun dragging away customers from the store. The report's findings highlight a list of risks that the hierarchy view as ones to be careful of. These include the economic conditions in the US and certain international markets could adversely affect the business and financial results. An increase in the cost of high quality Arabica coffee beans could also be seen as a major high risk. Starbucks has viewed the coffee prices rising as a high risk due to the fact that were they to change the type of coffee that they use in the stores, it could have a negative impact on the brand value as consumers and shareholders demand products of high quality from the coffee chain. As Starbucks is an ever-growing brand, it is going to be a large company that it already is 10 years from now. This is because, although the price of coffee are on the increase, coffee and tea are both big markets and domestically and globally, so were this to affect the company, it would not be on a monumental scale. However, with the company announcing a number of closures of its retail stores, there could be a move that some shareholders looking to invest in the company could have some concerns over. As Starbucks have made some losses in some areas of the company due to the increased price of coffee having an impact on the increased price of the stores, the downscaling of these stores could be seen as a sign to those looking to invest as a major shareholder that it could be a move for financial future stability. At Starbucks, the use of theory and strategic management would benefit the organisation highly in the coming years. They do not lack simple structures in their strategic decisions, but there are always different ways in improving the company globally. Starbucks is a huge profit-making company that has the money to take on different risks when it comes to strategic movements to help them financially and all other aspects of the company as a whole.